students, welcome back to the session on the study of financial institutions. Under that, the differentiation or the classification is made on banking and non-banking financial institutions. So, according to the structure, we would be dealing first with the banking sector or the banking system of our country. So, to know or to study the banking system, first we need to understand the banking structure of our India or of our country. So, for that, let's have this session in order to understand what is the structure of banking system in our country. So, the banking system is first, it has to have an RBI or the central regulatory system in order to supervise or in order to regulate the the functioning of banks in our country, which is RBI, or we say it as a Central Bank, Reserve Bank of India, established in the year 1934 on 1st April. So this bank acts as in there are multiple functions being performed by central bank, and it also acts as a regulatory institution. It acts as a it acts as it takes the regulations, or it frames the regulations for the functioning of the different banks existing in India. Any bank which has to be established, it has to be registered, and it has to be licensed under Central Bank of our India, which is RBI. Okay, so considering the RBI has classified into two different segregation or classifications with respect to the types of banks, which are scheduled bank and non-scheduled bank. So scheduled bank are the banks which are registered under the second schedule of RBI Act 1934. So the most of the banks we see in India are registered under scheduled bank because there are certain conditions implied on this banks would be if we set up if any bank is registered under set a scheduled banks list of RBI, it has certain provisions, it has certain benefits in order to enjoy as a bank in our country. So non-scheduled banks are the banks which are not listed on the second schedule of RBI Act 1934. So it doesn't enjoy any kind of benefits or any provisions provided by RBI in with respect to the functioning of banks in India. So the most of the banks are established and registered under scheduled registered at scheduled banks. So I repeat, scheduled banks are the banks which are registered under second schedule of RBI Act 1934. So moving ahead, so as we are more focused toward the scheduled bank, and we see more banks established under scheduled bank. So first focus on what are the scheduled banks existing in India. So scheduled banks are divided into two different banks, which are the commercial banks and cooperative banks. So the commercial banks, so as name itself refers, these banks have established itself in order to provide the financial services to the needy or the people who are in need in terms of finance in order to earn profit. So these are the banking institutions who are established in order to earn or to make profit out of financial services. Okay, so moving ahead, we have cooperative bank. Here, as name defines, these are the banks set up by different members voluntarily setting up societies or a group of community which has an intention to serve the financial necessities in order to help the community with their financial needs. Okay, so moving ahead, we have a differentiation or a classification with respect to the commercial banks. We'll see one by one. So public sector bank we have. So this is the bank where we see the minimum 50%. See, public sector banks are the banks which has minimum 50% stockholder is government. We see minimum 50% investment is done by government. So such banks are referred as public sector banks. So the regional rural banks. So the regional rural banks or RRBs are the banks which have established in order to reach the regional rural people in terms of financial services. So these banks are focused towards regional and semi-urban areas in respect to financial necessities. Okay. Next we have foreign banks. So foreign banks are the banks which have established their branches in India, having host branches in foreign country. Example, SBI or say HSBC is a Hong Kong bank established in India. So the branch of HSBC in India is referred as foreign bank to an Indian banking system. Okay, so next we have is private sector bank. So these are the banks in here. The banks, the financing or the source of finances is by the private investors, not the public. So the maximum stakeholders are private investors or individuals or the institutional investors in terms of investment with respect to private sector bank. Whereas in, if we compare public sector and private sector, public sector banks are where we see the maximum stakeholder is government, central government or state government. If whereas with respect to the private sector bank, it is the maximum ownership or the stakeholders are private investors, not public. So and with respect to the foreign banks has to follow the regulations with respect to both the countries, whereas the host country and the branch country. Yes, so this is how the different the structure of banking system exists in India. So we have see under public sector we have nationalized banks and SBI associate banks. So nationalized banks, see during post independence, so we had there was a situation where private investors were the private investors, the existence of private banking were more. So government felt somewhere those banks are overtaking in terms of financial services, were not beneficial to the public. So considering the benefit of public and considering the growth of country, they have decided converting private banks into and public banks by implying certain regulations in terms of nationalization, where they took over the private banks as in public banks. So so the conversion of the private banks into and public banks is referred as nationalization. So we have the same way we will be dealing in detail in terms of history of banking system in India in detail. So how the nationalization system came into place and how the SBI and the other national banks established in our Indian system. So this is the overview of banking structure existing in India.